US home prices poised for a surge as mortgage refinancing skyrockets. Hi, everyone, and welcome to Ainslie Insights, brought to you by Ainslie Bullion, Ainslie Crypto, and the Gold and Silver Standard as the Ainslie Group celebrates 50 years. Today, we welcome back Branko, who has been researching the potential for a significant breakout in US house prices and what it could mean for the broader economy. How are you going today, Branko?
Yeah, good. Thanks, Chris. I think today's topic is going to be interesting because, we obviously know a lot about the Fed moving, 50 basis points down. There's a lot of other effects that come with that. Obviously, it was a lot of relief to people, but there could be some negative side effects also, which we'll get into.
Absolutely. And it was interesting to me because you're really highlighting how quickly people were responding to, or potentially going to respond to that rate cut with what you were talking about, that really significant housing price inflation. Can you maybe just start us off by explaining the mechanics behind that, how that's likely to work and why that potentially is happening so quickly?
Yeah, so basically, you have the big 50 basis point cut, and given the kind of unique timing of all this isn't typical economic conditions, right? This isn't like um, that. Like, obviously, house prices are still high, and they're cutting rates because they need to because of inflation. So because of the way that inflation and house prices aren't exactly linked in their usual kind of way, it's going to have a unique effect. And basically, people are starting to refinance their homes at extremely high rates. And then as a consequence of that, usually you're going to see, because of those lower rates, increased borrowing, and then in return, increased house prices. And in Australia, if we follow suit, it's going to have more of an effect, which we can get into later, but that's the basic mechanics of it. And then also you have shelter inflation starting to rise as well now, which is shown in the graph. You see this kind of like, which I'll put up on the screen here, but it kind of steadily increases during COVID. It's been decreasing for the past year or bit, and now it's starting to pick up, and the 50 basis point cut will only further exaggerate that.
Yeah. And that makes sense. But you specifically talk about front running the Fed. And I think that makes sense as well. That's what people are doing. They don't want to wait for those further rate cuts because for whatever reason, they probably because it's been held for so long. I mean, that's a reason I can imagine that it's been held and held and held, and people are just waiting and waiting and waiting. Now they've got some relief. They go, let's just go do it and do the change that we were looking for. But what's your take on the longer term affordability in the US if this is the case? Is it like what we're experiencing here, where it just prices more people out of the market?
Yeah, I think that. So I'll put up a quick graph of the refinancing index, and you can see a massive spike, basically 2 weeks in a row, and it's quite significant. And I think the big takeaway is, yes, you have a lot of people that are struggling, for debts, and that's why they're refinancing. So that's one bracket. They finally get some relief, and they want to, refinance it. But then also those that do have some more discretionary income now, who aren't in debt, can now use that to buy more property and then price people out of the market. So you do have kind of two-pronged approach. And to be fair, in Australia, because we use variable rates a lot more, it's going to be more people trying to front run the Fed, in that you lock in a variable rate now with the expectation that prices will continue to drop, with interest rates will continue to drop. In the US, it's a little different. They use fixed rates more, so that's not really the case. It's more people trying to lock in some savings and get some relief after, this cost of living crisis. But you still get people that will be able to use that money from the refinancing to invest in property and continue to price out a lot of first home buyers.
It certainly seems complicated, and I can imagine there's just so many factors involved. One you talked about was owner's equivalent rent, and that's a very US concept where they really incorporate that into the consumer price index, sort of saying what your house would cost if you're renting it from yourself. It's a bit of an abstract sort of term that they use. But speaking more broadly, do you think that inflation potentially picks up from here if we do see this pushing through? Because it's certainly part of those metrics. If we start seeing it pushing through, does it impact renters, the cost of living generally? Is it something we need to be on the lookout for?
Yeah, I think usually when we think of like CPI, we think of like groceries and like these more normal day-to-day things, but owner equivalent rent is a big component of CPI, and it's expected that rent prices will increase as a result of this, as we're kind of already starting to see. So we should see that sector of CPI significantly increase. And again, to kind of reinstate this, usually when the central bank cuts rates, you have rental prices kind of at a lower level because, you think the economy would be struggling, for example, and everyone stimulated that. But because of the unique economic situation we have now, rent prices are actually kind of quite high and they're starting to increase again. So this component of the CPI could dramatically accelerate.
Switching gears a little bit, I'm interested in your perspective on the upcoming election. It's something we've been talking about a fair bit. We've had that rate cut happen now, quite a substantial rate cut. Some people arguing it wasn't enough. Other people arguing it was, more than what was necessary. But it certainly wasn't the minimum. Like if we think about a quarter of a base, 25 basis points, quarter of a percent being the minimum. Do you think some of this was politically, like, what's your view? Is it politically driven? Is it that really they had to do it anyway? How do you think about it?
Yeah, I think it definitely was politically driven to go the extra that extra bit. I think we were slowly pricing in that 0.5% basis cut, but 0.25 was previously expected, but I probably tipped them over the edge that, hey, you know what, we would like some relief for the current political establishment. It would probably be, it'd benefit them. And I think we see this throughout all the metrics, as we discussed a lot more in the past. The labour market metrics always seem to be revised down, a month later. So this is a consistent theme, and this is probably the biggest example of that, where they want to cut it as much as possible, and then they'll probably cut it again leading into the election, because at the end of the day, people's pockets is what makes them vote. And if, even though they probably don't see the full picture and that it is a bit of manipulation, they'll probably just see, I'm doing a little bit better now under Biden and Harris, but in reality, it's, a bit of manipulation.
And last question, which is a slightly different angle again. We know we have in Australia a supply issue. We know that there's just not enough houses being built, which is part of what is pushing these prices up. Similar seems to be the case in the US. Do you think that this refinancing wave impacts that dynamic between supply and demand? Potentially, I mean, I can imagine a scenario where it maybe frees up houses that were previously people weren't prepared to sell because for whatever reasons, or they couldn't find buyers because of financing costs. I don't really know how I think about it. I can't really put it together. But do you think it is likely to impact supply and demand here, that we're going into this cutting cycle? We've got, pressure on supply, as has always been the case, or has been the case recently. What's your view on that side of things?
Yeah, so I think that we're going to see a probably short term, not much of a change, as people, like I discussed earlier, probably cover their debts and need some relief. But long term, as these rates continue to decline, I think we'll see a longer term change and shift in the demand for property, which will be significant, especially in Australia, as often, properties are like a small portion of people own a large quantity of property. That should theoretically go up and increase demand. But in the short term, I agree, probably won't be much of a change as people refinance for different reasons.
Well, it's certainly an area we need to be paying attention to, because, as we know, housing impacts everyone, and it does tend to give us some insight into what's going on beneath the numbers, at least in the US, and how that flows on to us and everyone else. But thank you for your work on that today, Brenko, and thanks for keeping us up to date on it.
No worries. Thanks, Chris.
Thanks, everyone, for watching. We'll chat again soon.